How to avoid shakeouts using the 20 SMA. Now, the 20 SMA strategy is very, very simple. Essentially, we're looking for candles to cross and close below or over the 20 SMA. When that happens, that's step one. We're waiting for step two. We're waiting for a following candle to confirm the high or the low wick of the candle that closes above or below the 20 SMA. Now, because this strategy is so simple, a lot of us are just waiting, and we're taking trades long, short, long, short, long, short, long, short, and getting chopped up, right? How do we ever really know which ones are going to work and which ones are not? To be completely honest, you're never going to know if the trade's going to work in your favor or it's going to go against you. But there's a couple of things, maybe a couple of supply and demand zones that we can put on our charts that can help us with that. Now, one of the levels that I have on my chart, it's an indicator, the linear regression channel 50. I chart on Thinkorswim platform with Charles Schwab. That's where I do my equities and options trading, but I also use it for charting for futures prop firms. So I execute generally on TraderVate with Apex, and I execute on Project X with TopStep and daytraders.com. So with that being said, I'm doing all of my charting on the screen that you guys are looking at. Now, the linear regression line is right here, and I should actually change it. Let me just make it a little bit of a different color so we can see it. Maybe we make it, what do we want to make this color? Maybe we make it like a red, like just do a red, right? Let's just do a red because it's the level I want to focus on. So notice this linear regression line sitting right here. Notice here, this 20 SMA wicks below the linear regression, but fails to close below it, okay? So if you notice here, it wicks below that linear regression, but fails to close below it. So a lot of people would be looking at this 20 SMA and they would be thinking to themselves, closure below the 20 SMA, this is going to be my entry point, and then literally you get wicked in by 3 points and it goes against you a ton, right? So how do we avoid that, right? Well, one, you're going to have to work on discipline and patience. You're going to have to understand that not every trade's going to work out, and you're going to have to be very, very selective. So for me, even if I'm given the opportunity to take a trade based on one of my strategies, it doesn't mean that I'm going to take it 100% of the time. I need it to be an A plus trade or a B plus trade. Now, what does that mean to me? That means that I'm below, in this case, all levels of demand, and I have at least some room to work with. So in this particular case, just because we close underneath this 20 SMA, it's still trading above the linear regression. Now, if we're trading above the linear regression, that is basically telling us that we are still trading over that demand. So I don't want to go short until I get a new setup that closes below the linear regression. Now, what is the linear regression? The linear regression is taking the 50 previous channels, so the 50 previous candles on whatever time frame that you're looking at, and it's giving you an average price, and then it's giving you a standard deviation of 0.5 off of that. Okay, so that's all it is. So when we look at this particular scenario, we don't legitimately get another setup until 5, 10, 15, 20, 25 minutes later. Now, there was multiple candles that closed back over the 20 SMA. However, there was no following candle to confirm. So even though step one was hit, there was no step two on this long. Even though step one was hit here, we're still trading above that linear regression. So we want to ignore that. And besides the point, there was never no step two. Now, this candle at 7 a.m., which is 10 a.m. Eastern time, we finally close below the linear regression. And the wick is even lower than that. So now this is step one. Okay, so this is S1. Now we need step two. This candle is step two. What is step two? A following candle that confirms the low with space. We need space. Now, the space we're looking at here is a daily 5 SMA that's going to be used as a target. Now, below that entry price is 23,335. Within 5 minutes, it goes down to 23,326. That's about 9 points. The next candle opens up. It starts to bounce. Yes, it's going to put you into drawdown about 5 to 6 points before immediately starting to sink and test and touch that target down here at 23,316. So this one trade, just being patient and making sure that it's an A or B plus setup, making sure you're below your levels of supply and that you have space to trade, this one setup would have netted you from an entry price of 334 all the way down to at least 318, 317. So we're looking at almost 20 points. And given if you're trading one mini contract, that's around $400. If you're trading 5 micros, you're looking at almost $100, $150, $200 here, taking those 20 points. Remember, for every 20 points that you take out of the market, let's even backtrack, because a lot of us don't even look for 20 points. Let's say you're looking for 10 points. For every 10 points that you get for trading 1 micro, you're earning $20. So if you trade 5 micros, that's a $100 trade. Okay, it's a $100 trade. Now the next setup happens to be 35 minutes later, and not only did we get a nice confluence of a bounce off of a daily moving average, but we get a closure back over our 20 SMA. That's step 1, right? And in this particular case, we've got a lot of room to the high of day here. So we've got a lot of space, right, for this trade to work out. It's not all crammed up here above a level of supply or right below a level of supply. It's got space. So this would constitute as another A or B plus setup, right? This here is more like, yeah, it's a setup, but it's not the best one. And, I'm just taking this trade just because, I want to make money fast, right? Be patient, guys. Be patient, because if you wait for the A and B plus setups, you're going to make more money. This trade here, even if you took another 10 points, that's another $100 trading 5 micros. That's a $200 day. Essentially, you can walk away on the day. That's sufficient enough with Apex to log it in as a profitable day. One more day closer to a payout. That's sufficient enough for Top Step to walk away with another day closer to a payout with Top 1 Futures, with daytraders.com. All of these prop firms will count $200 towards your P&L for a profitable green day that you guys can log and get one step closer to that payout. Wait for your setup, be patient, follow something simple, and just stick to the plan. Don't try to trade a dozen setups a day. Don't try to trade 6 different setups a day. Focus on one particular strategy and focus on perfecting as best as you can that one particular strategy, and then start expanding your tool belt. I hope you guys are interested in this type of stuff. If you are, leave me a thumbs up. Also, guys, 90% off Apex evaluations. You can use my discount code DAnthony if you want to run this setup and you want to try this strategy. Use code DAnthony. Save 90% on those evaluations with Apex Trader Funding. I will see all of you guys on the next video. Also, I have cut the price, the barrier to entry to enter the trading community at Evolution Traders. Right now, it's 50 or 45% off for the next 3 members. If you guys have been on the fence, this is your time to join. I will see all of you new guys on the inside tomorrow. Let's crush Friday, and I'll have a game plan laid out for you guys tomorrow. It's already been posted in the room, so just go over into the trading room after you guys join and go to my channel where it's my analysis and recaps. That's giving you my game plan for tomorrow, the exact levels that I'm looking to trade, and I will see all of you guys tomorrow.